Good morning and welcome to Charting the Markets on Monday, the 18th of December 2023. Markets are beginning to wind down for the year, though tomorrow's Bank of Japan meeting provides one last real hurdle for traders to navigate. And earlier this morning, Asian stocks were generally lower, with the Hang Seng leading the fallers, and South Korean stocks were slightly pressured by the news that North Korea had fired 2 ballistic missiles, including a long-range missile. And then at 9 o'clock this morning, we had the German IFO index, which was the only major piece of data out today. And it unexpectedly declined to a 3-month low. So basically not really much going on ahead of tomorrow's Reserve Bank of Australia minutes and also the Bank of Japan monetary meeting. So let's begin by having a look at the FTSE 100. And as we can see here on the daily financial bet, on Friday we sold off to the red line here, the 200-day simply moving average, at around 7,561. And then today that acted as support before we began to head back up again above the psychological 7,600 mark. So right now the FTSE still looks bullish and continues to do so, provided we stay above the last reaction low, that is to say Friday's low, at 7,547. As long as we stay above there, further upside is likely to be seen and could take us back up again towards the October high at 7,702. And then above there, we've got all the highs going back to July of this year between 7,723 and 7,747, which are basically the key resistance area for the FTSE 100 going forward. Now, if we were to fall through Friday's low at 7,547 next week, we could perhaps, or this week I should say, we could perhaps retest the mid-November and early December highs at 7,543.35, and then below there we've got the orange line, the 55-day simply moving average at 7,481. So these are potential support levels for the FTSE 100, but as you can see here, we have a series of higher highs and higher lows. That is the definition of an uptrend, so it's more likely that further upside is in store for the days and weeks ahead. And the story is quite similar with regards to the DAX 40 contract, the German stock index, which last week hit a new all-time record high above the psychological 17,000 mark, and then came off as the president of the European Central Bank, Christine Lagarde, said that no one had mentioned a rate cut at the bank's monetary policy meeting last week. And on that news, the DAX 40 dipped down to 16,661 on this daily financial bet on Thursday. And since then, we've traded above that low. Now, you can see here we are currently testing the October to December uptrend line, which is so far holding. But if we were to see a fall through Thursday's low at 16,661 take shape, we may well retest the July high at 16,532. But that should really act as strong support going forward, and perhaps help us then hold around there before we retest the 17,000 mark, either later on this year in low volatility, low trading volume along the festive season, or at the beginning of next year. The US markets also are quite interesting if we look at the S&P 500, and we've got 2 new constituents as of today, that is to say Uber and also Nike. And both of these are now part of the S&P 500. And as you can see here, the S&P 500 has been trading in a very low ranged volatility, also very low volatility trading range below last Thursday's 4,739 high, and did so on Friday unexpectedly in low volatility, despite triple witching taking place, so option expiries basically of about $5 trillion, coinciding with the rebalancing of the S&P 500 and the Nasdaq 100, which we could have thought could have led to a lot of volatility, but didn't. So here, not much really going on. In the index looks in pre-market, pre-opening trading still quite bullish. If we take out last week's high, 4,739, if you let me zoom out here onto the weekly chart, we can see that we would then head up towards the November 2021 high at 4,743. So that's the next upside target, ahead of the record all-time high made back in January of 2022 at 4,817. So these are the upside targets for the S&P 500. But as you can see here on the weekly chart, we've had 7 consecutive weeks of gains, and that's something we haven't seen since 2017 in the S&P 500. But clearly here the trend is your friend, and that's still pointing higher. And as long as we stay above this uptrend line here, going back to October of this week, of this year at 4,652, provided we stay above there, further upside is likely to be seen with regards to the S&P 500. The US dollar stabilized last week as rates cut expectations changed slightly, having fallen quite drastically when Jerome Powell basically said that the Fed was pivoting and that he was now pricing in with his policy members at least 3 rate cuts next year by the Fed in the US. And the effect of that was that the euro benefited very strongly against the US dollar. As you can see here, we had a very sharp acceleration to the upside, take us to the psychological 110 mark, just below the November high at 110.17, before then coming off again. Right now we're trading below those highs from last week at 110.09 and the November high 110.17, which represent really good resistance and support coming in here around the red line, the 200-day simple moving average at 108.32, below which we also have support going back to the mid-September high and also the early November highs and the November to December uptrend line, which basically comes in between 107.69 and 107.56. So that's really good support for the euro against the US dollar. And from a technical medium-term perspective, we should remain within this uptrend channel on a medium-term basis we've been trading in since October of this year, provided we stay above the current December low at 107.24. The euro is also quite interesting versus the British pound, because you can see here we've had a very sharp descent as the euro and the European Central Bank is basically more dovish than the Bank of England. And we saw last week that 3 out of the 9 monetary policy committee members at the Bank of England voted for another rate hike. And even though the Bank of England kept its rates unchanged, it did lead to some volatility in the currency pair. But as you can see here, the euro depreciated much more sharply than the British pound did, and we can see here that last week we had a small recovery in the British pound, take us in the euro against the British pound, take us to 86.34, but since then we've slipped back down again and are basically hovering between that high and the low seen so far in December at 85.50. So further sideways trading likely to be seen here. If we were to rise above 86.34, the next upside target would be above the 86.50 November low, the 255-day simple moving averages between 86.62 and 68. So these are potential upside targets for the days ahead, as long as we stay above Friday's low at 85.71 on a daily chart closing basis. Another currency pair that's kind of interesting is the British pound against the US dollar. As you can see here, it has been rising since the end of October, and we still have a series of higher highs and higher lows. So that is still the definition of an uptrend. And here, unlike the euro against the US dollar, we actually did make a higher high, take us to a near 4-month high with regards to the British pound against the US dollar to 127.94 last week, before we consolidated slightly and came off. So here, if we were to rise above 127.94, we would then probably take out the mid-August high at 128.19 and head back up again towards the late July high around the 129.80 area. But unless that happens, as you can see here, the latest price high in the currency pair has not been confirmed by a higher reading of the relative strength index. So as that RSI here reading is lower than the one back in November, we are seeing a lower high here, whereas on the market we saw a higher high, and that means that we're seeing negative divergence on this price chart, and it could indicate a short-term reversal in the trend. and could mean that we could retest the November to December uptrend line around 125.48, and also the red line here, the 200-day simply moving average at 125.07 in the days ahead. So maybe short term we could see the British pound come off against the US dollar. The US dollar had an impact on several commodities, and we could see that on the gold chart, for example, as well. As you can see here, on the gold chart, we came off our all-time record high at $2,000.121 when the Hamas-Israeli war resumed after a ceasefire at the beginning of December. But since then, we actually came all the way back down again towards $1,974 per troy ounce, which was last week's low before the gold price accelerated to the upside again. And now what is interesting from a technical perspective is that we failed for 3 consecutive days last week to break through this previous October to December uptrend line, which now, because of inverse polarity, acts as a resistance line. And it did act as a resistance on 3 days last week. And now that that resistance capped the upside, we are sliding back down again towards the October high and also the early December low, as well as the mid-November high, and these come in between $2,010 and $2,007 per troy ounce. So that is potential support for the gold price in the days ahead. As long as that holds, we may have another attempt at overcoming last week's high, $2,048, and in that case, if we were to rise above that, we could then head towards the high seen back in 2020, 2022, and in March 2023, which were made between $2,070 per troy ounce and $2,082 per troy ounce. Let's have a look at the Brent crude oil price. You can see here that we also see some positive divergence here. We dipped down on the front month futures contract last week to 72.50. But the reading which accompanied that low on the relative strength index was higher than the previous reading, which was a lower low here on the early December RSI reading. So we have a higher low on the oscillator. Yes, we have yet we have a lower low on the Brent crude oil price, and that is called negative divergence, a positive divergence, excuse me. And basically the fact that we've now also taken out last week the high from Tuesday here at 76.74 is potentially bullish and does indicate that we could see a reversal in the oil price to the upside. And that could then take us back up again towards the October to December lows around here, the downtrend line $81.20, and also the red line, the 200-day simply moving average at $81.63. So these are potential upside targets, provided we stay above $72.50 on the oil price with regards to Brent crude oil. And last but not least, I'd like to mention the natural gas price out of the US. And what is interesting is that the front month contract here with regards to futures is now trading outside of its November to December downtrend channel. And this is the first time this has happened since early November. We dropped down to $221 and have now reversed to the upside, have broken through this downtrend channel resistance line, and are on track for our 4th consecutive days of gains with regards to the natural gas price. And that could then take us back up again towards the September low, which was made at $2.63, and then slightly above there we also have the red line here, the 200-day simply moving average at $2.70. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on X. My handle is @AxelR_IG.